Welcome back. Global economic growth holding up better than expected as markets here at home hit record highs. Technology valuations are soaring, gold prices skyrocketing, and the International Monetary Fund says that the world economy is showing real resilience. Joining me right now is the IMF's managing director, Kristalina Georgieva. Kristalina, great to have you. Welcome.
Thank you very much. Great to be with you, Maria.
You are calling the global economy better than feared, but worse than needed. Tell us what you're seeing right now.
What we are seeing is remarkable resilience. Here in the United States, last quarter growth exceeded anybody's expectations at 3.8%, despite the uncertainty that surrounds us. And it is truly time of uncertainty with geopolitics, technology, demography, all playing a very significant role. And making resilience a main objective for businesses, for governments, for households. So what we recognize is that all those who were saying a couple of months ago, be prepared for recession, were proven wrong. By the way, Maria, you and I were in a conversation, and I was saying, no, we don't see recession on the horizon. I'm so happy I'm proven right.
Yes.
What we do see, however, is that growth remains globally below historical averages. Before the pandemic, we grew 3.7% on average. Now we are projecting only 3% growth in the years ahead. And we also see that a big adjustment to that new world of uncertainty is still necessary. We are very keen at the fund to pass a message. What are the sources of resilience? One, dynamic private sector. Private sector is more adaptable, it is more agile, and we want to see entrepreneurial energy driving the economy in the future everywhere. And two, strong fundamentals. When you have sound policies, when you have good institutions, they are an anchor in this new world of uncertainty.
Yeah, you're so right.
But main message, Maria.
Yes.
Main message, Maria, to everybody is buckle up. Uncertainty is here to stay. You will be driving in the fog for quite some time. So learn how to do it.
Yes, it's a great point, and you're right. We spoke about a year ago, and a lot of people were worried about tariffs. You were not. A lot of people are worried about recession. You were not. You were spot on correct. And next week, the world's finance ministers and central bank governors will be gathering at your annual meeting. What do you hope to accomplish there? Because you said it a moment ago, the U.S. economy is seeing its fastest growth pace in nearly 2 years in the second quarter, driven by consumer spending, which was strong, but we also have the policy of the Trump administration, which is trying to put the private sector first. When I asked President Trump, what do you want to see as far as your legacy is concerned when it comes to the economy? He said, I'd like to see the economy run and led by private enterprise, which is exactly what you just said, Kristalina. What are you expecting out of your annual meeting next week?
What we expect is that countries will talk with each other to calibrate their expectations for the year, and also to consult with each other on what policies work and what policies don't work. And there, this emphasis on agility, adaptability that comes with more private sector energy in the economy, I do expect to be quite strong. Countries will be talking about trade. What we have seen is much less impact of the tariffs that the U.S. Introduced than feared a couple of months ago, for two reasons. One, tariffs in the United States from 23%, where they were headed in April, settled at 17.5%. And actually, when you look at what is collected, in other words, effective tariffs, when all the adjustments are put in place, it is more like around 10%. And what we see is the rest of the world deciding not to retaliate, no tit for tat, and to continue to trade. So that reliance on bilateral agreements, plurilateral agreements, on trading with each other for the small open economies is sustained. Will it continue? And I hope during the meetings we would have some clarity and some energy around reforms that underpin more private sector entrepreneurial spirit, as well as relying on trade for small, medium-sized, open economies in a way that helps the world to grow.
I want to get your take on Europe versus the United States. Kristalina, I was looking at Mario Draghi research, and of course, the former head of the ECB writes in his research about a year ago about the fact that the U.S. has so much higher valuations when you look at just the markets than Europe. In fact, right now, the U.S. can talk about 7 or 6 companies that are at least $1 trillion in value. One is NVIDIA is $4 trillion in value. You look at Europe, and they can't seem to generate valuations more than $300 billion, which is Novo Nordisk, which is, of course, the maker of Ozempic. And I'm wondering if that's regulation. And I also want to get your take on why some economies in Europe are doing so well. I mean, we spoke with the president of Poland recently. Poland doing very well. Italy doing very well as well. Giorgia Meloni also taking that stance that you just said in terms of independence and private sector leadership. Can you give us a sense of Europe right now versus the United States from an economic standpoint?
Well, the U.S. economy has high productivity and has already exceeded its pre-COVID trend, primarily driven by deep capital markets and entrepreneurial spirit. Innovation is turned into an economic asset here in the United States much faster than this happens in Europe. What we see in Europe is not completing the single market is hurting the European economy. We have been urging Europe, as has done Mario Draghi, to move towards genuine integration in the financial sector, that there is a capital market union in Europe. We have been urging Europe to bring one regime, we call it 28 regime, for all firms, so companies operate under the same rules whenever they are in Europe. We have been urging Europe to complete the energy union, so there is one energy system for the whole of Europe. And I do believe that if Europe becomes braver to do what we are calling for, regulatory house cleaning, it would become more attractive. I mean, right now, 300 billion euros of savings of European people are right here serving the U.S. economy. And that would continue to be the case unless Europe genuinely brings the single market to life. And it requires determination. This is my beloved continent. I come from Europe. I really want to see Europeans placing more attention to competitiveness and recognizing the world has changed. The world that we had before, in which Europeans can enjoy long vacations, no more affordable.
Yeah, it's a great point, and that is exactly right in terms of competitiveness, and that really was what the Mario Draghi report was discussing. But Kristalina, right now we're in a really important moment with regard to AI and artificial intelligence driving so much investment, certainly in the United States, big tech striking multi-billion-dollar deals, and investors are betting heavy on the future of AI. But the Bank of England has warned about a possible bubble. Kristalina, what do you want to say about AI as it relates to the United States and Europe, and how the economy will behave differently as a result?
Well, artificial intelligence has the potential to lift up productivity tremendously, and as a result, solve our problem of low growth. And this is why the bet on artificial intelligence is so attractive. We calculate that there is a range of options of how artificial intelligence would affect growth, and it could be quite high, quite significant. Now, if this is to happen, then of course investments that are now made in artificial intelligence will be paying off. Where is the key? The key is in AI penetrating sectors of the economy rapidly and generating this high productivity that brings return on investment. These are early days, Maria. There is this saying, the proof of the pudding is in the eating. I think we need to eat some more of this pudding. But I am quite enthusiastic. Why? Because we have seen historically the United States unleashing productivity exactly on the basis of betting on innovation, betting on the role of technology to transform our economies.
And it certainly feels that investors everywhere are believing in that path. We will be watching this. Kristalina, it is always a pleasure to speak with you. Thanks so much.
Thank you.